Okay, in this video, we will now look at reconciliation of control accounts. So having learned the sales ledger control account format and the purchase ledger control account format, we now need to know how to reconcile between these two. Now, before we go into the reconciliation proper, we need to go back to basics. Okay, so we need to go back to basics and understand this. So it all starts with books of original entry, right? So falling back to the types of books of original entry that we have learned, there are 6 of them that we learned. Okay, you have the sales journal, which records credit sales. You have the sales return journal, which records the sales returns. You have the purchases journal, which records the credit purchases. You have the purchase return journals, which records the the purchase returns. You have the cash book, which records all monetary transactions, the receipts of money and the payment of money. And finally, you have the general journal, which records anything else other than what is mentioned in the 5 books of original entry here. So which means what you record here in the general journal should not be credit sales, it should not be sales return, it should not be credit purchases, it should not be purchases return, and should not be monetary transactions. So such examples of what you record in the general journal, what you need to record in the general journal are these: opening balances, purchases of non-current assets on credit, all forms of balance day adjustments. So these are all the balance day adjustments that we have learned. Irrecoverable debts, allowance for irrecoverable debts, irrecoverable debt recovered, depreciation, accumulated depreciation, accruals and prepayments. Okay, so my point to you is this. It all starts with books of original entry. So when I label here books of original entry, I could be referring to any one of these 6 here. So it's important for you to understand that the details from the details recorded in the books of original entry would be transferred or posted to either the sales ledger or the purchase ledger as appropriate. Okay, but then the totals from the books of original entry would be recorded in the sales ledger control or purchase ledger control account in the general ledger. Okay, now if something is wrong with the total of the books of original entry, then that will affect the control accounts. If something is wrong with the details or the way you recorded the details of the books of original entry, right? Or maybe you would have recorded the details in the books of original entry correctly, but you posted it wrongly, or you recorded it wrongly in the sales ledger or purchase ledger, that's going to affect the sales ledger or purchase ledger balance. So in this lecture, we are attempting to correct this situation. So the steps to doing this is we need to identify all the errors and then update the control account and then reconcile the sales ledger or purchase ledger balance to the updated control account, updated sales ledger control or purchase ledger control account. So these are what I just mentioned. Okay, so it's important that before you even start, when you look at a question, you must be very clear as to whether the question is talking about sales ledger control or purchase ledger control. Okay, so here's an example. So in this example, the total of the purchase ledger shows this amount, 67,660. But the purchase ledger control account shows another amount, a different amount. So obviously these two are not the same amount. So then the question has to give you all the different errors which took place. And here they are. These are all the errors. So what we need to do is we need to analyze each of these errors. Some of these errors would affect only control. Some of these errors would affect only the purchase ledger, and some of these errors would affect both. So anything affecting the control only, I will record as C. Anything affecting the purchase ledger balance, I will record it as R, because we would have to do a reconciliation for that. So anything affecting both, I'm going to label it as C, R, or C stroke R if you like. So let's start with the first one. Discount received has been overstated. So this error is about the discount received column on the credit side of the cash book has been overstated by 1,000. Okay, so since control account picks up total, so this is going to affect the control account only. Therefore, I'm going to label this as C. Next, a credit purchases invoice for $2,040 had been completely omitted from the books. So this means this purchase invoice should have been entered in the purchase journal as a detail. So unfortunately, that was not done. So that means that the detail is missing in the purchase journal, and the total will also be understated by 2040. So since the detail is missing, that's going to affect this figure 67660. Hence, we have to show it in the reconciliation. So therefore, and it's also going to affect the control account. So I'm going to label this as C, R. Then a purchase ledger account had been understated by 100. So this error talks about a particular supplier's account in the purchase ledger. When we calculated the balance or whatever recording, we have understated that amount by 100. So this mistake happened in the purchase ledger, one of the supplier's account. So this 100 is going to affect the 67660 only. Hence, I'll have to show it in reconciliation. Hence, I'll label it as R. Okay. Next, a credit balance of 850 in the purchase ledger had been set off against a contra entry in the sales ledger, but no entry had been made in either control account. So this is contra. And this contra entry had been recorded between the sales ledger and the purchase ledger, but it was not recorded at the control account level. So this will affect the control only. Okay, next, a payment of 1,450 had been debited to the creditor's account. So this means this 1,450 had been debited in the particular supplier's account in the purchase ledger, but the credit entry was not recorded as a detail in the cash book bank column. So the detail is missing 1,450. So therefore, when we total up all the payments made to all the suppliers, that total payment would also be understated by 1,450. Hence, this mistake will affect the control account only. And lastly, a credit balance of 3,210 had been omitted from the list of creditors. Now, in obtaining this figure, we missed out an amount owing to a particular customer, a particular supplier, and that amount, or maybe it could be a few suppliers, that amount, a particular supplier. So that amount is 3,210. So which means this total here is understated by 3,210. So which means the control is not affected. So hence I'll show it in the reconciliation. So what the question requires you to do is we need to draw an amended purchase ledger control account and show a reconciliation after that. Okay, so our first step is to start off with the wrong control account. We are now attempting to update the control account. So we start with 72,270 and we need to record it on the credit side because that's like your initial balance, which is not correct. Now, I'm going to pick up all the C items when I update the control account. So starting with this one, discount received had been overstated by 1,000. So discount received is something that we would record on the debit side of the trade payable, the purchase ledger control account. So this means that we have over debited by 1,000. Hence, we need to credit back the 1,000. Next, a credit purchase invoice for 2040 had been completely omitted from the book. So which means we have understated the amount of the credit purchases. And this is something that we need to record on the credit side. Hence, the credit side is, we have undercredited by 2040. So therefore, I will record 2040 on the credit side and I will label it as purchases omitted. Okay, the next C item is here. This is about contra, and as I've mentioned earlier, contra is always a deduction. Okay, and since we are working with a purchase ledger control account, which is a trade payable control account, which is like a liability account, so to deduct, we have to record on the debit side. So therefore, I will record the contra on the debit side. Okay. Next, a payment of 1,450 had been debited to the creditor's account. So this is already done in the purchase ledger, which means this 67660 is after deducting 1450. But this 1450 was not recorded on the credit side of the cash book. So hence, the payment would be understated by 1,450. So which means we need to debit a further 1,450. Okay, so that's all for the C items. So once I've completed all this, I'll balance this account up and my balance is 73,010 and I would have to bring it down. So finally, this is the correct figure. This is the correct figure. So now the next step is to prepare the reconciliation. So once again, I'm going to have to reconcile the purchase ledger balance, which is 67,660. I'll start off with that amount. And I have to end with this figure. So along the way, now I'm going to pick up all the R items. So a credit purchase invoice for 2040 had been omitted. So we need to add, which means we owe a supplier 2040, but we did not record this in this figure. This figure does not include 2040. So we need to add a further $2,040. Then a purchase ledger account had been understated. So this will affect 67660, right? So we need to add. And finally, a credit balance of 3,210 had been omitted in the list of creditors. So this account is understated by 3,210. So therefore, I have to add. Okay, once this is done, when you add these to $67,660, you see we should get back this figure which we obtained here. So this is how you reconcile your purchase ledger to the purchase ledger control. Okay, that's all for this lecture.